What is going on, everybody? Welcome into another edition of the Daily Energy News Beat Stand Up here on this gorgeous Thursday, February 16th, 2023. I am your humble correspondent, Michael Tanner, coming to you from an undisclosed location here in Dallas, Texas. As always, joined by the executive producer of the show, the purveyor of the show, and the director and publisher of the world's greatest website, EnergyNewsBeat.com, Stuart Turley. My man, how we doing today?
It's a beautiful day in the neighborhood. Now, I mean, it was a fabulous day today.
It was a fabulous day. We've had some internet issues, so this is like take 70 of this intro. So hopefully we've got it lined up for you guys. We have a great show for you lined up. Stu, as always, is coming with some banger articles. First up, Biden administration bet 74 million on enhanced geothermal power. Stu will talk about what's going on in the geothermal market. Tesla app to remotely controlled cars crashes across Europe with 503 error. Yeah, probably not smart to have your keys on your phone, but Stu will cover what's happening with their app. Next, we have Ford cuts 1 in 9 jobs in Europe as it turns electric. Interesting. So Ford is moving into the electric space. We'll see what that's all about. Next, the IEA has come out and said the oil and gas industry earned $4 trillion last year in a new report. There's an article that we'll cover talking about what they say. And then finally, Biden restarts $10 billion tax credit for clean energy makers. We've seen this time and time again from this administration. So Stu will cover what's going on in the renewable markets. He'll kick it over to me. Not much superficially really that happened in the overall markets, other than to say that the EIA dropped today crude oil storage of 16 million barrel build, and that was offset by the fact that this IEA report, which basically comes out and says demand's going to be a little bit stronger. I'll cover what that means. Natural gas slightly falls. 2 stories I think it's interesting to point out. One, Comstock Resources being a pure gas player. I think it's interesting just to take a look at what their earnings look like. They dropped them yesterday. And then an interesting tweet from one of my favorite Twitter accounts looking at some unrealized losses from Southwestern. So it'll be pretty interesting to dive into all that and a bag of chips, guys. But first, check us out on the world's greatest website, EnergyNewsBeat.com, dashboard.energynewsbeat.com. If you were on that website today, you saw this insane crude oil build of 16 million barrels. It's the best place to check it out. It's our combination of data and news. We are hard at work at V2. Trust me, people. We are working hard for you, the common listener, and we appreciate it. But as always, EnergyNewsBeat.com, all the stories are there. Enough of the pleasantries, though, Stu. Where do you want to begin?
Common listener. Holy smokes, dude. Did your mom raise you to be a bum?
I'm a bum. I'm a bum.
All right.
That's why I'm the surf. I'm a surf.
Okay. That's why we get along so well, Michael. Okay. The first one, I'm not a Biden fan, and it just depends about how he's doing. But this first article, Biden administration bet 74 million on enhanced geothermal power. The Energy Department grants aims to cut the cost of new geothermal systems that generate electricity from heat miles underground. Basically, this is a very nice thing. More than 5 terawatts of heat resources exist in the United States, according to the DOE. Enough power to meet the electricity needs of the entire world. Okay, hogwash. That's always a nice way to do that. Here's where Matt Welch, who is a friend of the firm, we did a webinar, or excuse me, a whole webinar series for him last year, and he is the head of the Texas geological geothermal industry there. And so geothermal, Michael, the number one thing you got to do to get geothermal going is drill a well. All right. Hey, you're already there with all these wells. And so this is a fantastic idea as they get this moving. Think about the ducks. Think about the wells. This is huge for Texas. This is huge. Great thing. But here's where I'm going to go into a little bit of chowderhead on this. We're now at 30 some odd $1 trillion in debt They're going to do 74 million. There's more than 5 terawatts of heat resources existing in the United States. I'm not, even with my crayon, this is sounding like a better investment than most of what they're doing. This is quoting out of here from successful ESG projects require multiple rounds of fracturing to connect those two wells. The drilling skills that hydraulic fracking industry mastered decades ago, enhanced geothermal. So it would be wonderful for the oil field service companies to open up a arm and do geothermal drilling to keep some of their hands working and everything else. Love it that they're spending money. They're just not spending their money wisely out of the other areas and could really spend that up. Make sense?
Yeah, I mean, to make this feasible, I'm sure you're gonna have to spend a lot more than 74 million, but we'll give credit where credit is due. Shout out to the Biden administration for actually coming through on some legitimate funding. I won't quabble at this. What do you got next for us? I got to hear about Tesla's app.
You always love the blue screen of death, Michael, when you're
or when you were younger, if anyone had an Xbox or like a PlayStation, you'd get the red light of death when that means you're done. You just had to go buy a new one.
Yes, the new Tesla app allows drivers to remotely view the status of their vehicles, lock or unlock doors, manage climate control, and control charging. The inability to access this app could create headaches for drivers. One of the tweets about the Tesla app being down from a person in Germany on Tuesday morning, it's like you lose it, you can't get in your car.
Yeah, I mean, it is funny. We're going to this world of all digital, and what happens if you don't have your phone on you? What happens if your phone gets lost, or you leave your phone somewhere, you leave your keys somewhere? I mean, it's things getting all bundled into one is great until you lose it. Having a password manager is great until you fall for the phishing scandal, and now they have access to all of your passwords on everything. So I think I take it, I obviously people were still able to get into their car. They have a physical key, and there are other things that can open the car. But it is funny. We start trying to consolidate everything onto this tech. Tech doesn't work all the time. Trust me. We're trying to build a tech app right now. It's not fun. It is fun. Don't get me wrong, but it's not just, click a button and boom, you've got a mobile app. Like, no, it requires huge amounts of undertaking. It's numerous multiple people collaborating, especially to bring an app together like one that works on the Tesla. I mean, I can only imagine how hard it is. So be wary.
Analog is not all that bad. And I had a 1943 Willys, which was the original Jeep. Like, it looked like MASH, World War II. It had like 18 forward speeds, and it would crawl up a building. No electromagnetic pulse would take it out.
Yeah, I mean, fun fact for our listeners, Stu was actually one of the test drivers of the original Ford Model T.
Yes, I love me a Model T. Okay, speaking of Ford, we're going to go to Ford now in Europe, and Ford cuts 1 in 9 jobs in Europe as it turns electric. Okay, let's take a look at why. Cutting 4,000 jobs in Europe over the next 3 years as it hastens to transition from petrol and diesel engines to an all-electric fleet by 2035. Michael, this is in response to the EU voting to actually kill fossil fuel cars, internal combustion cars, by 2035.
Yep.
Dumbest thing on the planet. I mean, this is just this is Forrest Gump stupid. I mean, I think Forrest Gump is smarter than they are. Anyway, so
yeah, I mean, it's going to be very interesting. All of these car manufacturers are pivoting hard into EVs outside of, what is it, Toyota, who's pivoting into gas. I I'm pretty sure it's Toyota who's pivoting more back into hybrid into gas, which
Well,
in my opinion is the way we should go. I think, it's clear though, it's just their European factories. I mean, if you look at the chart,
right.
it's all Germany and the United Kingdom. So it's not the US, where I don't think we're necessarily going to see gasoline. We're not going to see California like combustion engine gasoline bans for the rest of the United States. They're also getting rid of some admin jobs. I'm always in favor with trimming the fat, especially
Right.
in the age of software where a lot of this stuff can be automated. But it just goes to show they're really putting their money where their mouth is on these EVs. And it's interesting. I mean, at some point you're so far down the road, it's hard to come back. And trust me, there's some talented engineers out there that are going to need a job.
Oh yeah. Hey, one bit on Toyota though. Last, I think 8 days ago, the CEO of Toyota was asked to step down because of his position of not going EV. So the
Proxy battle, fun.
yeah, the board got him, and so you're gonna see a quiet change here pretty quick, that they are gonna follow everybody else on their planet. And I think it was because of they were hearing that about that from Europe going that way. Anyway, just a tidbit there for you. Okay, let's go to the next one. Oil and gas industry, Michael, earned, there's a lot in this one, and it earned $4 trillion, says IEA. First thing about the IEA is the guy is a real knucklehead. And I'd even go far as the IEA and the UN should both be disbanded, but that's just my personal opinion. Okay, the global oil and gas industry profits in 2022 jumped some $4 trillion. Here's an interesting tidbit. We talked about earlier this week on how much money is needed to drill just to keep normal decline curves in check. Over half of that, $2 trillion would get us at least caught up. Think about it. They made $4 trillion in profit. That would go a long way to keeping the price down if demand stayed the same, especially the countries in the Middle East that have to diversify their economies. In my view, COP28 Climate Summit could be an excellent milestone to change the density of Middle East countries. Now, the COP28 head of the COP28, Michael, came out and said natural gas is something we're going to need. So he's pushing a big natural gas push. So more fun there than you can shake a stick at. Your thought?
Well, I think it's $4 trillion is a lot of money. There's a lot that could be put back into the ground.
Not according to the U.S. Congress. They keep printing it.
Yeah, that's a good point. Again, I think the issue is a lot of this money was made by national oil companies. Wasn't necessarily, I mean, it was made by big independents. Don't get me wrong. It was made by United States oil companies. And yes, United States oil companies are turning around and divvying them out to shareholders. Why? Well, because from 2010 to 2016, investors got slaughtered on oil and gas. Everyone was worried about BOE, more volume versus like, oh, are you making money? What's cash flow look like? And so now that shift has happened, you're seeing investors mainly talk about, I want my return to capital. It's why all these companies are increasing dividends. It's why all of these companies are doing stock buybacks in order to pay back the investors who theoretically have stuck with them through the hard times, through COVID. And national oil companies are different though, Stu. A lot of this money either resides in that national oil company or gets funneled into the rest of the economy, allowing these economies to grow. I mean, Saudi Arabia is experiencing insane growth right now.
Right.
Why are they experiencing insane growth? Well, because there's plentiful money to go around. If you just start pouring money into public projects, you will see growth. I mean, not that we're spending, not that the United States doesn't spend that much money, but we don't necessarily spend the the Saudis can spend more money on public projects per person than we ever could dream of, because they have a much smaller population and a much larger discretionary budget, specifically because 90% of the revenue is tied to oil and gas, and $100 a barrel looks pretty good on a balance sheet. If you're doing 2 million, if you're doing, I mean, just do 1 million barrels a day, Stu, times 100. Do the math. Just do the math. It's a lot of money. So you can think about, I think that's where a lot of this is coming from. So, to say that, supply is going to fall because we're not reinvesting. Well, isn't that on you to just reinvest more? I mean, I love yesterday, 2 days ago, the Saudi Aramco CEO comes out, talks about how we're not the world's not investing enough. Well, you are the world, dude. So, what are you doing? It's like,
well, the U.S.
rules
the
for
US
thee,
company,
but not for me.
well, the U.S. companies are not,
But they're a public market. It's different. I already told you it's different.
Right.
It is in the United States is a different market, if only because there's competition of multiple firms. There is no competition in Saudi Arabia. There is no competition in
Right.
the UAE. They are legitimately a open cartel.
Right.
So, yeah. So I only say this and point out that, yes, a lot of money's being made. And we've got a lot of people coming out and saying, well, we can't invest more. Can you? Or do you just want to pour this money back into your economies in order to make them grow? Not a bad thing. Not a
Right.
bad thing. But that's the reality, in my opinion, of the situation. So, see it as you much.
Oh yeah, I think it'll be interesting. So,
What do you
all
got
right.
next? We got one more. It says Biden. It's solar panel tax. Kill me.
We're going to cover this one with about 2.5 seconds. The program provides a 30% tax credit for technologies including carbon capture systems, grid modernization. I have a problem with that one as well too. Modernization, clean hydrogen production, and electric fuel. I was watching a thing, the grid, in order to put all renewables by 2035, we have to double the size of the grid. In order to double the size of the grid, it will take 140 years to double the size of the grid. It ain't going to happen. So even if we put this much of a tax credit on it, it's like flushing money down the toilet or hoping it'll work. This is just
Somebody's getting that 10 billion though. That's going into the pockets of somebody. So
yeah, it's funding elections, but we'll leave that alone.
see, FTX is all back to FTX, Ukraine, back into Maxine Waters' pockets. I'm telling you, I'm taking notes.
Well, good. But this one, it will go to the renewable companies. It will go to those
The
things.
lobbyists, it'll end up on K Street.
Right.
Some fancy lunch. Someone's eating well. Someone's eating well.
You bet. Hey, off to you now.
Yeah, I mean, not much to cover other than I think oil prices, as we saw, were up, kind of up and down all day. They were down off of an insane EIA crude oil storage build of 16 million barrels. Again, the best place to check that out, dashboard.energynewsbeat.com. Shameless plug. I mean, fourth largest crude oil build in the history of keeping track of these things. The fourth largest. And prices were down all the way to 77.50. But then the IE comes out, and in this same report that we just talked about, with a $4 trillion revenue for these oil and gas producers, come to find out that they think world oil demand is going to be higher than the original estimates, which buoyed prices up from 77.50 all the way to a max of a little over $79. And as time stands here at 6:25 on the 15th, we're currently trading 78.73. So you can really tell the demand side of the equation is driving the sentiment on oil and gas. I mean, think about it. We had a physical crude oil supply build, fourth largest in history.
That's not
offset completely and even negated by an estimate that demand will be higher than original estimates. So if that's the clearest picture, in my opinion, on what's going to drive oil prices one way or the other. So if you hear about supplies getting too much, it's demand. Supply is supply right now. It's all demand side right now. If we hear demand, we're revising demand down, or, China's shutting in, or, Russia's stopping more oil. That's, I think, going to have a more negative effect on prices than a lot of what's going on the supply side, and vice versa. So take that into account. We don't give investment advice, but if you're a trader, take that into account. Demand side seems to be much stronger than the supply side. On the nat gas side, I mean, it's pretty boring, other than, it's a little bit warmer. So we did see prices drop $2.45, all the way up over $2.60 today. We do get, as you listen to this show on Thursday, you will get the natural gas storage numbers, and we'll actually, range of expectations are somewhere between 82 and 120 BCF draw. Last year they had a 165 BCF draw, and the 5-year average weekly change is about 166. So, we'll probably, I don't want to guesstimate where we'll come in, but my guess is probably around 100. So it'll be interesting to see what that number comes in. I think there's two things quickly to cover before you get out of there. Comstock Resources, they announced their earnings, just to give you an idea on what natural gas producers are doing. The one line that I found interesting: adjusted EBITDA. It doesn't really matter. That's a fake term. EBITDAX. It's actually adjusted EBITDAX. I mean, that sounds like a men's health pill.
Right. Hey, Michael, earnings before taxes and exploration. You always got to let people know, because EBITDAX, people don't know that it's, removing exploration.
Oh, exactly, because you lose all your money in exploration. But whatever it is, adjusted EBITDAX in 2022 increased 72%, and in the fourth quarter was up 61%. So just to give you an idea on how pricing plays into these specifically these pure play natural gas producers, it's right there. It's right there. They love it. They're not loving it now. Q2 ain't going to be pretty. Quarter one ain't going to be pretty. Jerry Jones is probably going to, he's saving his pennies because he knows what's coming.
What's coming?
I also thought this was interesting, Stu. Southwestern. Okay. This is one of my favorite. We talked about this before the show. This is one of my favorite Twitter accounts, at Energy Peddler, but he goes by the name Lupai, CEO, Enron Energy Services. One of the best. I mean, first off, just a side note, one of the best not troll names, but low-key funny Twitter names out there. So Lupai, CEO of Enron Energy Services. Have you ever seen, Stu, the documentary The Smartest Guys in the Room?
Right. How do you spell it? It's
called, just search Energy Peddler, ENERGYPEDDLER.
LER. Okay, great. Thank you.
Energy Peddler, Lupai, CEO, Enron Energy Services. Have you seen the documentary on Enron, The Smartest Guys in the Room? Have you seen that one?
I just saw parts of it. It was great.
Oh, so remember who Lupai is. Lupai is the scumbag who pockets $200 million. But remember what his thing was. He loves strippers and was always at the strip club. And there's famous story is he took one of his associates out with him to the strip club. Right. And after being out all night at the strip club, he's driving home and they stop at a gas station. The guy goes, "Why are we gassing up?" And he's like, "Well, we're not gassing the car." Lupai proceeds to put gasoline on himself because apparently it kills the smell of stripper, and his wife didn't like, and so his wife didn't know. Lupai, CEO, Enron Energy Services. Look up Smartest Guys in the Room. It's a great Twitter handle. So whoever's running this account, absolutely incredible. I love it. Cracks me up.
He's paying the $11 for a blue check.
Of course. But he tweets this about 4 hours ago. It's looking into Southwestern. Looks like they will have lost around $7.5 billion on hedges in 2022. he should have said unrealized losses, but whatever. 7.5 billion of unrealized losses on 2022 hedges. It gets worse, Stu. The company's only worth 5.8 billion. They're going to finish the year with 1.5 times leverage, which means they've got about 5 billion in debt. They only need 800 million of free cash flow in 2022. To put that in perspective, they lost 10 times that in unrealized losses on realized free cash flow on those hedges. What?
Right.
What? That would equate to a 200% increase in the company valuation had they not had those hedges. Wow. Now, before I go and rip Southwestern, a lot of the times you have to hedge. A lot of the times your banks make you hedge.
Right.
Why? Well, because the bank wants to know you can repay the loan, especially if you're known to default on your loan. Southwestern, I think they've been through bankruptcy a couple times. They're not the pristine cash flow operator, maybe like a Diamondback is, or one of the larger super caps who they'll be able to restructure their debt at any levels. So
right.
I just think it's interesting. Everyone talks about hedge. Well, yes, or lose 7.5 billion. Now, I'd love to see, what the constraints were from their bank. Was it their bank forcing them to do this? Was this an over aggressiveness based upon what they saw prices? I don't know, but that's a lot of cheese, Stu. Could have a lot of money with that.
Oh, you bet. That gasoline story I missed, but it's a good thing I don't do that anymore.
Yeah, it's a good thing. Little does everybody know Stu's the associate.
Oh,
that was with Lou Pie. So
no, I wasn't.
Save those stories for later. You got anything else tonight?
Nah, it's a beautiful day. We're gonna have an absolutely wonderful Thursday.
Absolutely. So with that, guys, we'll let you get out of here, get back to work. We appreciate you checking out the world's greatest podcast, the Energy Newsbeat Daily Stand-Up. For Stuart Turley, I'm Michael Tanner. We'll see you tomorrow, folks. It'll be Friday. Whoop, whoop.